Paul, we're here today talking about Aspen. Now, first things first, Aspen are trading at an all-time high.
$65 or something, yeah, amazing.
So what are the valuation metrics right now, and how does that compare with their global peers?
Look, pharma companies are very high margin operations, but this one is certainly growing faster than most. But remember, they've got a big business here. They've succeeded in expanding into Australia. They're growing all the sort of, public sector contracts, and now they're expanding into South America, and then they've got the big deal with Glaxo.
So what's the revenue split, local versus international?
I can't remember, but the international is growing, and it is the future of the business. So they're using the plants here locally, which are in Cape Town, PE, and East London, to expand and supply drugs all over the place. But remember, this thing with Glaxo is really big. They're buying stuff that Glaxo considers old and tired in their portfolio. And Glaxo are going to put in all of their Southern African operations in exchange for quite a big stake, a shareholding in Aspen.
But there's more in for Glaxo than meets the eye here.
Yeah, look, the first transaction was they bought some stuff from Glaxo for cash, and that's been very strongly earnings enhancing. So that's the reason the share price has gone up, is that the earnings that the company is recording are climbing and climbing and climbing. But there is now a second transaction in the works, and then there's the possibility that they may even do more together, because it does seem that big global drug pharma companies like Glaxo want to get shot of all of their stuff which is out of patent and which they can't sell for super premium prices.
So I think, in summary, smart management got a big stake at risk here, not paying dividends for the time being because they're using those cash flows to pay down the big debt that they took on. Big margins and well-placed globally. Is there anything else you want to add to that?
Yeah, just to emphasize that management thing. I mean, Stephen Sard, very highly regarded in the local market, and for good reason. Very clever, very good at the corporate finance stuff, but also good at all the pharma type issues. One other thing I just want to put on the table is that they've got enormous expectations for expansion in South America, and it's going to be interesting to see if they can pull that off. But quite apart from that, there's enormous earnings strength that's going to come through in the Southern African business, as we said, and then to position themselves as a leader in terms of emerging markets pharma, which is a specific, unique investment category and could also attract additional foreign investors just to get access to that particular trend.
So continue to accumulate.
Yeah, obviously it would have been great to buy them when they were, at 30 Rand and now they're at 65. But if you haven't bought any yet, it still seems to me like it's not unreasonably priced, and the management team will deliver on their promises.
Good.